Hi everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through Twitter. We're also going to go through a little bit of platinum information. I know some people were saying I should talk about platinum. Well, I'll go over some data with you to show you some platinum. One thing I wanted to go over is kind of just my viewpoint to reiterate it real quick. I'm not a short-term trader. I'm a long-term investor. I look at things from a decade plus type length. Right now, if we look at the market conditions, we look at the ratios, we look at all those things that we look at, we've got ratios that are incredibly cheap for commodities. And that's why I consistently talk about commodities. Commodities are cheap to stocks. They're cheap to a whole bunch of other things. Precious metals are also cheap to stocks. They're also cheap to the money supply and all these other metrics that we use. So all the sectors that I am invested in are cheap on a historical basis. I buy those for a couple of years, and then I ride up that big move and sell it when the ratios get expensive. That is my thought or paradigm or thesis, however you want to call it. The technical chart patterns is what I also use. I use them in the ratio charts, and I use them on just the price charts in dollars. They are all putting in bottoms for the most part. That does not mean that we can't have pullbacks, that we can't move lower at some point before moving higher. So the big overall general trend, in my opinion, is that commodities will outperform stocks. And during that time of the decade, we could have pullbacks as we go up. We just put in very large bottoming patterns in a lot of these different commodities. A lot of them are either inverse head and shoulders, double bottom patterns across the board. So that's why I'm very positive on commodities, is because they're cheap on a historical basis. We have technical analysis showing us that they're putting in large, big bottoming patterns on the long term. In the short term, anything's game, guys. But short term, they still look good. So we'll dive in here. We'll take a look. I'll give you my financial opinions. We're going to talk about wealth building, commodities, or financial assets or stocks. So let's dive in here and take a look. Again, if you want to follow me, it's at finding_finance. And if you want to join our community, finding-value.com, we have a question and answer session coming up this weekend. And it is Saturday, 7 a.m. Mountain Standard Time. So coming on down, it says shale wells are losing oil output faster than expected, study says. And that might also be in relationship to the price of where oil has been sitting for a while as well. So we've got an article here. It says the steep drop in output from U.S. shales wells is turning out to be worse than expected. You can check out the article if you guys want to read the article, but that's one thing that we are looking at. A lot of investors, as when I say we investors, is that shale wells, they grow fast and they die fast. And the steep declines could bite us in the butt. And I don't know if the world is prepared for declines like that, because the majority of new oil production has come from shale wells. And if we lose that oil output, guys, it's going to get nasty in terms of pricing. Last time we ran into a constraint in oil, it was only attributed to America. And we had very big inflation. And we also had a run towards precious metals. And I think those conditions are similar to what is happening today. Bullish trend. This is WCP. This is Whitecap Resources. He says, close above 13 can punch the stock to 1550 and above. I can just see a nice little pattern here if you were to kind of look at the pattern, and it looks like we could punch to the upside. A lot of different stocks have these types of patterns. And what this is we were coming down, and I don't know Whitecap Resources. I'm just using this as an example. This is a downtrend. We came in, and this is an inverted head and shoulder. So you draw the trend line right across here. It's a shoulder, head, shoulder. We've come on up. We've consolidated here, and we're probably going to punch through and continue to the upside. This here is undeniably an inverted head and shoulders. You could also claim that this other line up here, if you draw the line across, is in another shoulder head shoulder pattern that we're creating, which is a massive, big old, gigantic inverted head and shoulders pattern, the way that you look at it. I am seeing these patterns across a whole bunch of different commodities. Now, in the short term, you can have violent pullbacks or pullbacks um, that do not wreck the big long term, big picture view, big long term patterns. So we could have a pullback here to whatever price, and it doesn't destroy necessarily the chart or the trend. So keep that in mind that there are pullbacks. It is normal, and it may not destroy the trend. Coming up, we believe, so this is Josh, we believe oil will reach $200 in the next couple of years at Strive Funds. Josh agrees. I think oil prices will go to all-time highs potentially in the next 18 months. What do you think? And that was posted on August 8th. I don't know where oil prices are necessarily going to go in the short term. All I can say is on the longer, bigger term view picture, it definitely looks like we're going higher. And we could go to levels that are much past $200 a barrel. Most people will ask the question or state, how can people afford that? I think the affordability needs to get chucked out of the window. The question is, how many people need to get priced out of oil for the demand to equal the supply? And if the supply has problems, $200 is probably not a high enough price. That's my take. Because we're going to have to price out a lot of people if there's a big demand supply gap. How do you price out 2 million barrels out of the market if there's that type of gap out there? If there is, that means the prices are going to rise quite a bit to a level that's going to price out 2 million barrels of demand if it's not there. So it's not about a function of affordability. It's about a function of how do you keep that supply demand in balance. Generally speaking, that balance and that I'll say the affordability reach is about a 1-to-8, 1-to-6 ratio against gold. So a 1-to-8 or 1-to-6 ratio, this $200 is a 1-to-10 ratio if gold's at 2,000. We're going higher than 200 most likely, and I think gold is going to go higher, which is going to push the price of oil even to higher levels, depending on where the price of gold goes. And that's also why people think that gold is manipulated and why they have so many contracts against it so that they can try to hold it lower, which ultimately holds all commodity prices down. GLD, it says, every day that goes by, this bearish head and shoulder top in GDX looks more likely to play out. Gold bulls need a negative credit market event to get the USA Fed to pivot and do emergency rate cuts like China did last night for gold to break out over 2,100. Only then will I go very long. So he thinks, Edward at least, that the Federal Reserve has to do something in this type of situation, like pivot or whatever. What I'm going to say is it could be driven by fiscal problems. It could be driven by bond market problems. And people run to gold and precious metals because they don't trust the bond market. Now, is this a legit shoulder head, double head shoulder? It could be. It might not be. This is also similar to a lead-in pattern that we usually see, and that we could go higher here. Possibility. The market conditions, I think, are ripe for gold to go higher, not lower. But could there be an event that scares everyone in the short term that brings it lower? There very well could be. And that's the problem with trying to trade the short term. Notice this length of chart is only about a year. So that's the problem with trading short term, is it can go in either direction. Longer term, precious metals are going to go up. These red days in the market are just a tiny blip on the radar over the course of an investing lifetime. Stay the course. Yeah, I agree. I'm I'm in the camp of commodities just because they're cheap, and I'm going to stay the course. It's just a blip. And even if we get a slowdown or a recession, I'm going to ride through it. It's a blip. And I don't know why people just can't ride through it. I don't understand that. 40% of US adults have less than $1,000 of savings. What's a good way to save money? Guys, that's really tight. 40% have less than $1,000 of savings. A good way to save money is just to watch your expenses. If you don't need it, don't buy it. That's kind of where I'm at. Underrated skill, knowing how to ask really good questions. Do you agree? What's a great example of this from your life? So I do a lot of interviews, and I am the interviewer, not the interviewee. The way that I approach this is from an auditing perspective. And the way that I ask it is I ask open-ended questions, which I think is a great way to ask questions. So when someone comes in, I'll say, you know what? I'll describe the positions that we have available. I would like to know how you fit those positions. You know, how your background fits with what I described in those positions. So then he or she will describe how, their background and how they fit the position that I described. So one, I'm describing the position. Two, they know that I'm asking, what the next question is going to be so they have time to think about it. And then I describe it, and then they can ask, basically answer it with whenever they want, however they best see fit. Then I ask other open-ended questions with them. So they might say something and say, oh, okay. And then I'll go off of something that they said in their response. I do not ask questions that are real pinpointed, and I don't ask for specific examples. For instance, a very popular question would be, tell me a time that you ran into conflict and how you resolved it. It's kind of a little bit open-ended. I guess you'll get some information, but generally I'll go off of things that they've already described. So if someone worked at CarMax, I would say, hey, look, how did you like working at CarMax? Can you give me some examples of what you thought was good management, what you thought was bad management? What are some things that you like or dislike about management at CarMax? And then they would say things that they're comfortable talking about. And it kind of pinpoints, at least to some degree, at their previous position or something. So it's open-ended, and I don't try to get people to give specific examples. I kind of leave it open-ended that they can choose some direction. So open-ended questions. API, big draw, crude minus 6.2 million, Cushing minus 1 million, gasoline's up a little bate, 700,000, and distillates down 800,000. So big draw is what he's got here. U.S. 10-year Treasury yields. The copper to gold ratio is often considered as a leading indicator for the direction of the 10-year UST yield. So I look at this, I think there's going to be a disconnect going forward because I think the economy could slow down and we could have 10-year Treasury yields go higher because of the supply-demand characteristic in the 10-year bond market. And that's what we're seeing here is a disconnect. And we could have stagflation. That very well could be the outcome. And this could have that disconnect like we're seeing in the ratio and the 10-year yield. We've got aluminum supply still facing issues as the market is estimated to have a deficit this year thanks to Chinese production declining. LME inventory is still at 5-year lows. Price is still unresponsive. And we're at very low inventory levels. We scroll down. The Daily Noise says, net worth is completely overrated. Try paying your bills with your net worth. Cash flow is what really matters. I think net worth matters more than cash flow. And why do I say that? So my question is, would you rather have I don't know, I'm just going to make up a number, $10,000 a month in cash flow, or would you rather have your net worth be $3 or $4 million? I would rather have it be $3 or $4 million. You know why? Because I can take my net worth I can configure it in a way to produce more cash flow from a high net worth than cash flow can generate cash flow. So a lot of these people, they try to generate a bunch of cash flow and they use a lot of debt to do it. They are highly leveraged and they could topple over on a house of cards at any second. Net worth is a buffer. Net worth is far more important than cash flow. If I have a bunch of cash flow from my job and I lose my job, what happens? That cash flow goes away. If I have a massive net worth and I lose my job, what do I have? A massive net worth that I can reconfigure into anything that I want. I can sell cars, I can sell homes, I can do stuff to raise and reinvest it differently to raise cash flow. If cash flow is all that really matters, then you can lose it at any time depending on how you have your life configured. So that is where if let's say you've got a ton of net worth, you can configure it in a way where you can generate 6 or 7 cash flows. So yes, cash flow matters, but it's not all that really matters. Cash flow will build net worth, and net worth will build cash flow, and it will compound on itself. So in my opinion, net worth is more important than cash flow. And that means that you took cash flow and saved it into something to build net worth. Net worth is it's a realization of savings and building something. Cash flow is a here and now that exists today but can be taken away at any second. So what you want to do is if the cash flow is here today, you want to build your net worth where if that cash flow goes away, you've got savings and a moat built around you. You're resilient. Net worth is resilient. Cash flow is like net worth is what you've learned. Cash flow is your IQ. Higher cash flow, higher IQ doesn't mean you're smarter. But if you've read more things and you use that IQ and you use that cash flow for something that matters, you will be smarter or more wise with it. And then that's what I kind of look at net worth as. TTF, European gas price, about to confirm a possible bottom. How pleasant as we turn towards the colder winter months. This is TTF gas. You can see a broken downtrend line starting to move higher. Now I know uranium had a little bit of a sell-off here past day. Nat gas is coming up, guys, and it looks pretty good. And I think nuclear does compete with natural gas and all these other electricity generating sources. So I think they are somewhat correlated. They're in the same realm and ballpark. They're also nuclear and uranium is in a lot of energy mutual funds and stuff like that as well. And energy has been going up. I do think that they all are somewhat correlated and that they're linked. Looks like a shoulder head shoulder. And it just broke the neckline and it's ready to run. But that's me. 2 words, holy crap. OPEC plus crude exports are dropping like a rock. Dropping like a rock. I can't remember what song that is. Put it in the comment section if you know what song that is. But there it is. In August, dropping like a rock. The recent pullback in Brazilian stocks is offering an excellent buying opportunity at technically oversold levels, in my view. For instance, local banks continue to be historically undervalued. Now, I go straight to the charts. So top 4 Brazilian banks, average price to book, very low. This was the early commodity cycle in 2002, big move to the upside. This is also probably putting in those my humps, you know, the 3 humps in the consolidation process, and we will probably break at some point to the upside. Very cheap. The FANG index almost perfectly retested its prior highs from late 2021 and recently formed what appears to be a double top. Mega cap tech stocks are yet to be impacted by the structural increase in 10-year yields. I agree. This is probably a double top, and we could see a decline in pricing. Now, could everything be brought down together? It's possible. Could commodities sidestep this move lower in the FANG stocks? Yes, it could. That's why it's difficult. Are we in a NASDAQ style crash, we very well could be. And we could be at the beginning of that crash. Be interesting to see what happens here. Stock market, real estate. So Buffett buying some home builders. So Yahoo Finance, several stocks that Warren Buffett's buy-in has taken new positions in D.R. Horton, Leonard, as well as stocks in Berkshire's increased stakes in some of these other Capital One and Occidental Petroleum. If you look at the charts, DHI looks like it's trying to break out. Is this an increasing wedge pattern that we're about to break to the downside, or is it going to break to the upside? Now, generally, rising wedges break to the downside. But I will tell you, this was a bull market here. This was actually not a bull market. This was the pullback in home builders. And this one pulled back upwards. This thing is actually ultra strong, DR Horton. Another one, this is Leonard Corp. You can see the three. It's 1, 2, 3. I probably could have drawn this upwards and did it like DR Horton. And where we could be breaking to the upside at any point in the home builders. It does depend on affordability, does depend on a lot of different things. And I'm not stating that this can't pull back or anything like that. Maybe it has a false breakdown first when the other stock market, if the other stock market falls, we could see everything fall together. It could be a false breakout to the downside, and then we rip to the upside. That's the problem with the short term. The short term, it can go in either direction for a variety of reasons. Long term, we still need to build the homes. And we're going higher long term. That is my opinion. And all of the commodity charts go up during expansionary phases of real estate for the most part, at least in history. So what are the chances that this time will be different? I don't think it's going to be different. That's what I think. It says how old? Okay, so I already went over that before. So I'm going to end it there, guys. That's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And we'll catch you guys later. This is Finding Value.